confident you're going to like this video. It's not only entertaining, but you're going to learn a lot today. So buckle up. Here we go. So we see mortgage rates, they have exceeded 7%, as we know. And if you haven't been checking up on this, I just talked to somebody the other day and they're like, hey, where's rates right now? A little bit, have they hit 5%? And I'm like, dude, where you been? They're at 7. And they're like, no way. So what I want to talk about today is why they hit 7. Well, the Federal Reserve keeps stepping in and raising rates and raising rates and raising rates. Well, today we have this PPI number, the inflation number at the producer level, and it was higher than expected. So what's the Federal Reserve going to do next? Well, that's what we're going to talk about. So what I want to put in context today is why the Federal Reserve is doing what they're doing. And I know we talk about this every day, but I think they're overdoing it. Let me give you an analysis. Let's say you wanted to lose 10 pounds. COVID, you ate a little bit too much and you just kept, eating and eating, but you didn't exercise and you're like, really, I need to lose weight. Well, let's dig into that. How long does it take to lose 10 pounds if that's your goal? Well, the reason why I'm talking about this is the Federal Reserve is trying to cure inflation. They got to get a little bit of time. So I'm putting the weight loss in the context of why the Federal Reserve should start to wait a little bit. So let's dig into that a little bit. You're going to find this not only amusing, but hopefully entertaining. So if you go through here and you're like, okay, I want to lose 10 pounds. How long would it take me? Well, if I walked every day and a little exercise, you can see here it could take me 10 to 24 weeks. So let's say 6 months. All right, so it takes 6 months to lose 10 pounds that you've gained probably in 2-3 weeks or 30 days during COVID. Okay, put that into context. So now, well, let's say I start to do the diet and after 30 days, it's just not working. So I decide I'm gonna starve myself. I'm gonna stop eating until I lose those 10 pounds. Well, how long does that take until, basically kills me? Well, you can see right here, it'll take 2 months. So if you don't eat food for 2 months, you're gonna die. So the Federal Reserve is trying to change the whole economy within weeks, and it's not working. Well, at least they're not thinking it's working. So here's what's happening right now. The Federal Reserve, here's what the Federal Reserve has done so far this year alone. They've increased rates. I actually had to calculate the number. 3,100% this year alone. So let's get to it. Here's the federal funds rate. This is the actual rate that they kind of control. They don't control any other rates. They don't control mortgage rates or car loans in a kind of a roundabout way they do. But here's the federal funds rate, the rate that they control. Look at where we were. So just back at the beginning of the year, that rate was 0.08. Can you imagine a rate at 0.08? Well, what is it today? Well, between all their aggressive hikes, they've raised it, and now we are at 2.56, an increase of 3,100%. So what I'm getting at, guys, here is Federal Reserve, please stop. Give this time to work, because without letting it work, we're going to have to starve ourselves and you're going to kill the economy. So that's the biggest piece of today. So what I want to talk about today is the producer price index, the one piece of the inflation number that came out today on the producer side of the equation. But in the headlines that we see today, it's nothing but just bad news, folks. You see here, Biden says he doesn't think we're in a recession. If it is, it's going to be very slight. How does he know? Okay, not even the economists on Wall Street can predict this, and a lot of CNBC commentators are saying, no, we're not there, but we're there, and so nobody really knows. The next piece of this is further 20% fall in U.S. stocks. It's possible. Okay, so we're already down about 23 to 25% in the stock market. Can we go down another 20%? So those that are complaining about the housing market and interest rates and housing affordability, I hope you're writing your stockbroker and Wall Street people to tell them, guys, okay, we're losing here in the stock market big, and so why are you telling me to buy stocks? So I hope you get my point there. And then the other next thing here is 86% of your Gen Z interns think that we're in a recession. So basically, I think we're in a recession. Most economists say we're in a recession. All the definitions and Investopedia and everything else says we're in a recession. So that being said, what normally happens in a recession? Well, you might be interested in this part. Right here, we're saying in Investopedia, what happens in a recession? Usually interest rates decline. And on average, what they do, they decline between 1 and 1.5%. So if you're sitting on there, you're sitting right now, you're saying, okay, I'd really like to buy a house right now. Guys, halt for a second. Here's what I would personally do in the whys. Okay, so right now we're seeing a slowdown in housing. So a lot of people are going to put their houses on the market. A lot of people are continuing to put their houses on the market. But some people are actually going to say, okay, I'm going to pull my house on the market. But I'm going to talk to you guys right now that are out there to continue to keep your houses on the market. I'm going to talk to realtors and also consumers right now. What I want you to do is check out this video, and it's right here. I just posted it this morning. It's an option, a mortgage option that's brand new to us. Okay, it's brand new, and it's what it's allowing you to do is buy down your rate in the first 2 years. Why only the first 2 years? Well, one is it's a cheaper way to do this. Okay, it costs you less to do this than to buy down actually your interest rate. Number two, I'm expecting between 2022, the rest of this year, and 2023, we're going to hit the recession. The recession is going to be finally analyzed and predicted, saying yes, we're in that. So then we're going to have to start, or we're going to start seeing the Fed pivot. Now, between now and the end of this year, the expectations are the Federal Reserve is going to continue to raise rates. And we're going to see that right in here. So this is saying the Federal Reserve by the end of this year is expected to raise rates another 1.25%. So if you put that in the context, they have two more meetings. They have a meeting in November and they have a meeting in December. What my expectations are, and I think they're going to be completely off the rocker if they do this, but here's what I'm thinking they're going to do. They're going to stay with another 75 basis point rate hike. Yes, the Federal Reserve is probably going to raise rates another 0.75%. So that's what I'm saying, guys, halt right now. If you're looking to buy a house, if you have to really buy a house, you got to do what you got to do. But what I would do is this. I'd wait till December, January. Okay, then I'd start putting my toe in the water. Why? Well, a lot of the markets are going to start really cooling down. The recession is going to take effect, and I'm expecting economists to actually come out after the election in November and say, guys, we're in a recession. Okay, so that's what my predictions are. Then coming into 2023, I think housing, there are going to be more supplies because the supply chain is really kind of getting fixed. There's tons of people. I think the rate right now is 20 to 25 people are pulling out of their contracts on new home builds. So you're going to have all those homes coming to the market. So you're going to have the new homes being constructed because of supply chain delays are coming here. They're going on the market. Then we have the existing houses that were built. People are pulling out of contracts. They're coming on the market. And then by March of next year, we're going to have even more houses on the market. So we're going to have a glut of houses coming on the market. Rates are going to be sky high. That's going to drive down prices. I didn't say crash. It's going to correct some prices back to normal levels. Then what the Federal Reserve is going to do is they're going to be forced to basically start a pivot. They're going to be forced to basically start reducing rates because they overdid it. They starved themselves. Okay, and so instead of killing the economy, killing themselves, they got to do something. They're going to start easing on the credit side of the equation. So if you're looking to buy right now, please, you got to check out this video right now. It's the number one product that we have on the market right now other than adjustable rates. So that's that. If you'd like to check out where mortgage rates are, stay tuned. We're going to go over that next. So here's where mortgage rates are today. Well, this is where we ended yesterday. Mortgage News Daily posts this every morning, and it's basically where mortgage rates ended. So what's this rate sheet that you see? Well, this isn't my rate sheet. This isn't any other bank's rate sheet. This is a national average. Mortgage News Daily surveys lenders all over the country. Here's the rates, guys. These are the top 6 mortgage programs that people use when they're buying a house or refinancing a house. You can see on the 30-year fixed, we went from a 30 or 52-week low, a 3, to now 7. We're going to probably hit 7. Let's see where the crystal ball is telling us where rates are going to go today. So for that, we go over to the MBS market. So the MBS market is basically the bond that trades on Wall Street that gives me basically a look into where mortgage rates are going. How does this work? Well, the number you're seeing on your screen right now is a mortgage bond, the price of a mortgage bond. Okay, so the price and its yield, or the rate, it has an inverse relationship. So here's all I need you to know. If this number, this number is 0 today, so mortgage rates aren't going to change. But if this number, the price of the bond goes down, what it does is it pushes up the yield on this bond. Well, because the bond is related to mortgages, it increases your mortgage rate. So we love when this chart is green. But look at the chart down below. You can see nothing but red and black and everything else. No really green there to really drive it up. So if you caught onto this, I have a green screen, so you're not going to see any green. So what would be representative as a green note in here, or a green signal, is basically black at this point. So anything on the chart that's black was green, but you can see that basically in the last 6 to 8 months, it's been nothing but red and down. And again, remember, down is bad. It means rates are going up. So if you'd like to find out more about me and my team, or you'd like to check out the 2-1 buy down program that we just listed above, all I need you to do is go to therateupdate.com. Here we are. You're going to find out all you need to know about me and my team. You're going to find out ways how to contact us. You could book a meeting right here. You can give us a call over here. Sorry, this is backwards. And in a second, boom, the chat bot just came up. So if you'd like to have a question, if you go to our website and you have a question, you'd like to get that answered live, just start the chat. We'd love to answer you one-on-one. So that is it for today. We do have a book a meeting. A lot of people are booking up. So if you're trying to speak with us on a one-on-one consultation, click that tab, set your appointment now before times are all booked up. So thanks for watching. God bless. And I'll see you tomorrow. Don't starve yourself. Bye-bye.